want to give you an insight into correlations. Now, you're not going to do this. It's too much complication for a private investor who's got, say, 15 to 20 equities to look at the cross correlation. We've chosen the Dow or Indu, Dow Industrial Averages here as an example of cross correlations, okay, between the 30 odd equities. So one means perfectly correlated. Well, obviously you'd expect American Express to be completely correlated to itself. 0 means uncorrelated, -1 means inversely perfectly uncorrelated, inverse basically. So you want equities which are not too highly correlated. What's highly correlated mean? Well, I'd say anything above 0.8 or 0.75. Ideally, you want a bunch of zeros in there, but as you can see, you don't get them. Notice how, for instance, companies like American Express and JP Morgan, because they're both in financial services, are relatively highly correlated. You'd think, well, hang on, they're two completely independent companies. Yes, they are, but 0.7, they move in tandem to that extent. Equally, the reason this is important and this kind of analysis is important, or at least to be aware of it, you're not going to cross-correlate these things and start creating matrix tables and looking at covariances and, you know, slopes and intercepts and all the rest of it, of course. But the point of doing this and showing this is to be aware what we mean when we say diversification. Diversification means things don't tend to move lockstep. Well, of course, nothing moves ideally perfectly in lockstep, but it can still be correlated. So when I do look at, for instance, Disney, which at the time of speaking I happen to own, I ought to be aware that it is going to be correlated to companies in a similar sector. But when I buy Disney and American Express, I should be aware that actually they're not that correlated. But notice how they still are 0.46 because they're both part of the Dow. People buy stocks in baskets. So sometimes people think, oh, how do I make sure all my eggs aren't in one basket? I know, I'll pick companies in different sectors. That's not necessarily enough because if they're part of another index, they might be, as you can see here, correlated. Okay, so it was just to give you this overview. Now, your action point isn't to go and look at these kinds of tables. Your action point really from all of this is to be aware of how correlation works and why it's important not to have all your eggs in one basket, because then we're just actually making one investment, not many. Okay.